Morning, everyone. Lovely to see some of you have joined the webinar already. We're just gonna hang around for a very short while, if that's okay, just to make sure other people have been able to join if they've been in other calls or anything like that. So we will get started in just a moment, and then we will get stuck into the content. Megan, if you're all right to share your screen, actually, you might as well do that now, and we'll get going. I think a few people are still joining. The numbers are ticking up slightly, so we'll just give it another 30 seconds or so. Get kicked off. Okay, I think we're probably good to go. So good morning again, everyone. It's lovely to see you all, and thank you very much for joining us this morning for our webinar, which is all about our Club Blue brand new Club Blue management liability and executive risk solutions. So very excited to be going through this new line of business for us. And yeah, thank you once again for joining it, for your time. I am Niall Dowds. I am the distribution consultant over in the UK retail team. And it's my pleasure to be able to host or help host this morning's call. And I will do some introductions of our presenters in just a moment. I will run through a bit of housekeeping first, if that's okay. Get the boring stuff out of the way. So this call is being recorded, so we will be sending round a link to the recording after the session is done. So if you've got any colleagues who haven't been able to make it this morning, or anything like that, people might be away, then feel absolutely free to send that through to them. We'll send around a follow-up email after this call, so you'll have access to that recording there. The format of today's session is we are going to do a presentation, and then we'll follow this with a Q&A at the end. So if you've got any questions that you brought along with you today, or if anything pops up as we're going through the content, please feel free to put it in the chat or the Q&A function, and we will pick through these at the end. And anything, if we can't answer any of them, we'll pick those up offline. But yeah, please do engage as much as you can. Any questions you've got, we'd love to help try and answer those. So our presenters today. So we've got Tom McCarthy joining us, and he is our Regional Management Liability Manager. So Tom's going to be co-presenting today with Kelly Richards, who is one of our financial lines underwriters. And it's my pleasure to hand over to you guys. Oh, actually, I'll tell you what, if we move on to the next slide, please, Megan, I'll quickly run through and the agenda. So we've got the Club Blue proposition, which I'll run through shortly, and then Tom and Kelly will run through the overview of the executive risk solutions and preferred risk appetites, and key product differentiators and enhanced MLP proposition. And then we will touch briefly on claims and Zurich Support Services before finally, as mentioned, going through the Q&A at the end. So if you wouldn't mind, Megan, just pinging on to the next slide. And I will just do a very brief overview of the Zurich Club Blue MLP proposition. So hopefully most of you, if not all of you, are aware that the deals started for the vast majority in May. So that was the 1st of May, and they run through to the end of April next year. So that's kind of the timelines. In terms of the actual MLP side of things, there is, and hopefully you're all aware of this, there's a 10% pricing discount on new business placed through Acturus and Zurich Online. So that is only for new business, so renewals don't come into that, unfortunately. But you can also contribute to your deal target via manually transacted business as well. So you've got that side to things, and there is a proportional contribution for financial lines to your payment for hitting the targets at the end of the year as well. So that is something to consider. So guys, if it's all right, I will now pass over to you.
Hello everyone, thank you for coming today. I know it's a very busy time of the year at the moment if your inboxes look anything like mine do. I'm just going to start off by just talking about our online proposition. So we can have businesses and risks on there that are up to £200 million. We've got two separate products. So one is ERS, which is our standard ERS product, and one is our charities product, so which covers trustees that are part of our charity risks. As you can see, we've been named #1 software house insurer for 3 consecutive years in 2023, 2024 and 2025. We get a lot of good feedback on our online platform. And we've also been awarded Gold for Excellence in e-trading at the 2024 Insurance Times Awards. Megan, will you just put me on to the next slide, please, as well? So I'm just going to start off with giving everyone just a brief overview of management liability at Zurich. So as you'll see there, we've got 5 different sections of cover, which I'll take you through. Our first section of cover is directors and officers liability. Purpose of this section protects your directors and officers from claims and investigations arising from actual or alleged wrongful acts in their managerial roles. This section gives those in leadership positions peace of mind, knowing they are supported while making important decisions about the business. Then we have our corporate liability section, which covers the liability of the company itself. If claims arise from actual or alleged wrongful acts committed by the company or its employees, the section provides coverage for those eventualities. Then we go on to section C, which is our EPL cover, so employment practices liability. This section provides cover for the business against claims for employees relating to things such as employment wrongful acts, such as things like discrimination, harassment and unfair dismissal. So I'm sure some of you will be aware that the government at the moment is proposing a new employment rights bill, which is due to be implemented. I think some elements are coming in October this year and further ones in April next year. So this will give additional rights to employees on day one of their employment. So we expect that businesses will see a lot more activity on the EPL section, and there'll be an increase in claims as a result. So it's probably a good time to start thinking about getting that cover put in place, in addition to the D&O and corporate liability sections that businesses often purchase. And then section D is our benefit plan liability section. So this was previously known as pensions trustees liability. We've amended the name of the section because obviously a lot of businesses now offer employee benefit plans as well. So we just want to provide additional cover for those plans as well, not just the pensions trustees liability. The coverage under this section supports the business against claims for wrongful acts for things such as breach of trust, breach of duty and statutory provision related to employee benefit plans. And the section also covers pension schemes and healthcare plans as well. The final section under our ERS product is the crime section. So this offers protection against things such as the financial impact of crimes and covers employee dishonesty, computer fraud, forgery and counterfeiting and social engineering. So the purpose of the section is to help insureds safeguard their assets, money and securities. You can see above there, the product criteria for our online system is turnover up to and including £200 million. So the policy is available on Actress and Zurich Online with the same revenue threshold. It's for UK domiciled private limited companies, LLPs, partnerships, charitable and not-for-profit organisations. The worldwide jurisdiction is standards, and we do have some restricted trades. As you'll see in the orange box below, there's not too many, so we do have a really wide appetite at Zurich, so we can cover most things. So it's just those few there that we can't cover at the moment. It's also worth mentioning as well that there are some restrictions on what can be placed on the online system. So if you've got a business that's got subsidiaries domicile with subsidiary companies domiciled outside of the UK, we can't cover those on our online system, so it is UK only, but we can look at those on a manual basis. Any companies that are not registered at Companies House, they can't go on the online system, but we can cover companies that are registered in the Channel Islands, so they can go on there. Any risks with over 500 employees won't go on the online system. And new ventures, so those businesses that have been trading for less than 2 years, but we can again consider those on a manual basis. We'll just ask for a complete proposal form and financial forecasts. I know a lot of other markets do apply insolvency exclusions to new ventures, but that's not something that we apply. So we can look at, depending on the finances and depending on the information that's given to us, we can look at amending the extended reporting period for runoff and applying additional terms, but we won't apply an insolvency exclusion as standard. Tom, I think I'll pass over to you, who's going to cover the key benefits of the ERS policy.
Megan, sorry, just before you pass on to the next slide, just a couple of bits I wanted to just mention, really, particularly. Sorry, Megan, could you go back to the last slide, please? Thank you. So, as Kelly sort of said, listen, the majority of claims that we pay under this policy would probably come as no surprise is employment practice liability. You know, we see particularly given the unemployment rates in the UK and how they've sort of spiraled upwards over the last few years. You know, EPL makes up about 30% of the notifications that we have on this portfolio. We've got about 25,000 ERS policies for UK companies, and EPL is very much the area where we pay the majority of claims. And the other two things I wanted to mention on this is that the only compulsory purchases for this product is D&O and corporate legal. You know, so you couldn't get a quote for EPL without the D&O, but the only compulsory purchases are Section A and Section B, D&O and corporate legal. So if you get a quote online for D&O, you will automatically get the same limit for corporate legal included as standard. Section D and Section E are two sections which are have an incredibly low take-up. These two sections, despite particularly with commercial crime, which everybody saw because it's so much more of a tangible type loss, you know, we are surprised that the take-up of these two sections is still incredibly low. So if you're speaking to clients and looking for a way to differentiate yourselves against some competitors and other brokers, you know, Section D and Section E is somewhere where I would probably focus some attention, particularly when talking to clients, because these two sections have an incredibly low take-up. And the final thing to just mention on this general slide is that the product the ERS product that you will get if you get a quote online is exactly the same product that you would get if you're coming to Kelly or I for a quote. You know, it's not a diluted version of the products which some of our competitors do have for their E-Trade product. So it is exactly the same wording that you'll get if you go online or come to Kelly or I for a quote or another Zurich underwriter. Move on, please, Megan. Thank you. So we re-released this wording at the beginning of last year. Because we don't get the opportunity to do it very often because of Acturis constraints and the Acturis and online E-Trade headache of uploading templates and amending templates, we sort of took the opportunity with both hands, and we did a deep dive onto what was available in the market in terms of MLP offerings. It was at a time where a lot of our competitors were reducing coverage, reducing capacity, putting insolvency exclusions on, as Kelly mentioned, as well as cyber exclusions and bits like that. So it was quite an opportune time for us to review the wording and come up with something what we think is quite compelling for UK businesses as an MLP option. So just to run through some of the key benefits then, and some of these are changes we made to the wording when we released it. So each of the 5 policy sections which Kelly has talked about are issued on an any one claim basis or any one loss basis as standard on the crime section. Now, it's still common that you will see aggregate limits particularly on EPL and crime when you are getting quotes online or offline from some of our counterparts. So each of our sections is issued on an any one claim basis, which for For EPL particularly, which is more of a frequency class of business, is an important thing to know. We increased our mitigation cost cover up to full policy limit. That used to be a small sublimit. It's now a full policy limit, and that will help pay for costs associated with regulatory investigations if it's risk management improvements that are needed as a result of a claim. A regulatory investigation or regulatory allegation against directors of the company will pay mitigation costs. This will also pay for things like if a shareholder brings a claim against the directors for mismanagement because there's some omissions in the financial reports. This will help pay for the cost of forensic investigators to correct the issue and do a deep dive onto the reports and accounts to effectively try and reduce and mitigate, as the name suggests, the severity of the claim. For the first time ever, we included a difference in conditions, difference in limits clause in the policy, which is in a standard and included for the first 12 months policy period with Zurich. So this is restricted to certain markets. So we have a definition of previous policy within our wording, which will basically name all the usual composite MLP insurers. Now, obviously, given the height of MGA activity in this marketplace for the last few years, there are a number of MGAs which we would open this up to. It's not available as standard, but if you've got a case with an MGA that you want to have a conversation about the DIC/DIL clause, then we're more than happy to do it. The only reason we don't include some of these MGAs as standard is because we can't guarantee the longevity of the capacity for these MGAs. Under the D&O section, we amended the automatic extended reporting period option, so the automatic run-off cover following a change of control. Now, this isn't something that was previously provided automatically under the previous guise of ERS, but it was one of the key things that we wanted to change because it's important for directors to have the ability to purchase extended run-off cover up to 6 years following a change of control, because that change of control can often be out of the control of the directors. So previously you would have had to come to an underwriter to ask for those 1, 3 and 6 year options following a change of control, but it's now pre-quoted in the wording, which is a useful thing to know. And crucially on this point, we opened up the change of control definition to include the appointment of receivers, liquidators, administrators. So once a company enters receivership or a liquidator or administrator is appointed, they become the controlling part of that entity, the controlling stake of that entity. So that would qualify as a change of control. So in the event of a liquidation or an administration, and whilst it's a doomsday scenario that clients don't really want to think about, it's important that directors have the ability to purchase that 6 year run-off cover if they want to at that time. Lots of our competitors don't include appointment of liquidators, receivers, administrators as a part of change of control. So this has quickly become a bit of a selling point to our wording, and particularly given that the number of insolvencies in the UK is at an all-time high. There's 48,000 companies at the end of 2024 that are on the brink of collapse. So this is an important thing to have in an MLP policy, because this is really when you're going to need the cover the most. So we increased our pollution defence cost cover up to full policy limit under the corporate legal liability section. Now, this is something that's probably quite important for risks like waste management, recycling, construction, manufacturing, who have a pollution exposure. So this will pay for defence cost cover as a result of a pollution event. It won't pay for pollution cleanup costs, but it will pay for the third-party liability type claims that come further down the line. Next slide, please, Megan. So we have always provided social engineering fraud cover within our crime section. So our crime section of ERS is not just first-party employee theft type cover. It includes funds transfer fraud, computer fraud, and also social engineering fraud. Now, the key change we made to our wording is that social engineering fraud used to be an extension under our crime section, but we dragged and dropped it into the main insuring agreements. So if you get a quote for crime as part of ERS, you will automatically get 50% of the crime limit for social engineering fraud limit up to a maximum of £1 million. We can give more cover offline. If that's an area of cover that a client is particularly keen about, we can increase it and can include it. We also have quite wide standalone crime appetite where we can give up to 10 million limits. That is offline, but if you've got crime inquiries and a crime requirement for larger limits and larger social engineering fraud limits, we have the appetite to have that discussion. So again, something else has quickly become a bit of a selling point to our wording. So we provide affirmative cyber cover within our corporate legal section. So in an effort to combat silent cyber in the market, lots of our competitors and lots of insurers have taken one of three stances. One, they'll remain silent on it. Two, they'll completely exclude it, which is something that we see quite often. And three, they'll provide affirmative coverage. So we've taken the decision to follow the third path and effectively provide affirmative cyber cover, third-party cyber cover for breaches of GDPR and breaches of data protection regulations. So again, this is particularly important for SME and mid-market companies, mainly because the take-up of standalone cyber is still incredibly low. You know, you guys will know this more than us, but the take-up trying to sell cyber to an SME client is particularly difficult because of one of a whole host of reasons. A lack of understanding of what the cover is actually providing, and B, because it's fairly cost prohibitive. So to know that there is affirmative cyber cover under an insured's MLP policy under the corporate legal section is quite a useful thing to have. You know, in this marketplace, we are seeing lots of cyber exclusions built into MLP wordings, particularly those operating on an e-trade and digital trading platforms. So our benefit plan liability section, which Kelly's already touched upon, has been expanded out from just including pension plans. So insureds will have trustees who are appointed to manage all sponsored company plans, such as training schemes, healthcare schemes, money schemes, superannuation schemes. All of those schemes that an employer provides to their employees will have a trustee who is responsible for transparency with the members of those schemes, discussing and deciding who is attributable, who qualifies for the scheme, and any individual employees who should or should not be part of that scheme. So there is cover now under this section of the policy for those schemes as well. You know, pension schemes will always be the primary source of claim under this section because it's so emotive. It's always the main scheme that employees offer their employees. And the pension regulator are a particularly aggressive regulator. So, you know, we will always see the majority of those claims falling as a result of maladministration or errors and omissions with regards to pension plans, but it's now been expanded beyond that. The automatic acquisition threshold has been increased to 50% of the total insured assets. So providing that, and this is quite useful for acquisitive companies, if you've got a company that is buying up smaller businesses, then providing that they don't increase the overall assets by more than 50% of the total insured, you know, those companies will be included automatically within cover. You know, before then it was 25%. So anything over that, you know, you would have had to apply to an underwriter, come to us, and basically we would have asked you a few more questions. But we've increased the asset threshold for the acquisitions, which is quite a useful thing as well. And finally, the multinational capabilities. So for those of you who've had dealings with multinational policies before, I won't kid you to say that they are easy and very quick to sort, and we can get policy documents to you very quickly. You know, I've worked at Chubb and AIG in the past, and I know that these multinational programs can be a headache no matter where you were. But the thing to know on here is that Zurich has a huge multinational network, and you know, we have a team in Whiteley who basically do all this stuff for us. So if you've got a client that's got overseas subsidiaries, operates in many different countries, and you want to have a conversation about which territories will need local policies, which ones we can do through financial interest clauses, you know, what taxes are applicable, which ones are cash before cover, any individual information requirements, we can effectively rely on that team to map these multinational programs out for you. So, you know, in the sort of the expansive nature of UK companies at the minute, and you know, globalization of trade, you know, and particularly for UK companies, you know, these multinational programs are becoming more and more common. So it's more just to say that we have the ability to do this if you have clients that have operating multiple territories. Now, multinational capabilities is something that we can do offline. We have a US revenue threshold online up to 50%, which is, you know, still quite high in my opinion. So, but that's revenue too. If they've got overseas subsidiaries, you'll need to come to us if you want ground up cover for those. But it's worth noting that we do have multinational capabilities. Next slide, please, Megan. Back to Kelly.
Thanks, Tom.
So in terms of our claims proposition, you'll see from the slide that it's not just insurance professionals. So we also have qualified legal professionals within our financial lines claims team who will deal with claims in-house. So the insured can benefit from specialist knowledge and practical insight by these people who've got a lot of experience in dealing with claims that we see under D&O policies. You will have a dedicated claims expert, so a single point of contact who takes ownership for all claims under your ERS policy. We also maintain strong relationships and oversight with our panel solicitors, so we ensure that you get a high standard of legal support. It's worth pointing out that we use tier 1 law firms as well, some examples of which are DAC Beechcrofts and RPC as well, so they are some of the top law firms in the UK. Can you go on to the next slide for me, please, Megan? So also as part of your ERS policy, the insured benefits from access to ARAG business law services. So they get access to ARAG business law, which provides them with resources and support. Some of the areas of support that are provided are health and safety support. So the insured will have access to guides, policies, and industry-specific articles to help them manage health and safety in the workplace. They provide practical guidance and make it easy for the insured to keep their employees safe and businesses compliant with health and safety legislation. There is also a legal advice helpline. The insured will benefit from legal advice covering a wide range of issues, such as you can see on the slide, employment contracts, disciplinary procedures, commercial contracts and disputes, and redundancy and termination. They also have advice on property damage, landlord and tenant disputes, commercial property issues, and HMRC tax inquiries. There is also a specialist tax helpline. I'm sure we're all aware of how complex tax can be. And they offer a tax helpline where the insured can get guidance on issues such as capital gains, inheritance tax, business property, trusts, corporation tax, PAYE, VAT, payroll and tax deductions as well. As part of ARAG business law, there is also a counselling helpline provided because obviously business challenges can impact the personal well-being. They offer a confidential counselling service which is available 24 hours a day, 365 days a year for the insured and their immediate family. So all ERS customers have dedicated phone line access for all the services, which makes access easier and straightforward. And this is a totally free service as part of our product. I think there's another slide on this one after this, Megan, if you can go to the next one, please. Thank you. So you'll see from the slide that if they were to use the service directly, it would be £259.20. But obviously, they're getting a lot of value with the services list that we've discussed previously. So for smaller SMEs, obviously they might not have HR and legal services available to them in-house, and obviously it can be a big cost to outsource these services as well. So this can be invaluable for those smaller businesses. If we look at the cost of what it would be for a solicitor to charge, they would charge £1,000 plus VAT to draft letters on behalf of a client. Average cost of drawing up an employment contract is £350 to £520. Average cost for arranging a shareholder agreement, £750 to £1,250, and average cost for creating terms and conditions for consumers is £550 to £750. So they're getting a lot of value for money for that £259.20, which is actually included in our policy, free of charge. As we can see below as well, legal advice solicitors typically charge £180 to £210 per hour to understand a basic problem and look at what information and evidence is required. So it is good value and it is easy to access with the dedicated helpline numbers, which we can pass on.
What would you want to say on that? Sorry, Megan, just to go back a slide. I'll keep making you chop and change. And what I would say about this is that, you know, nobody uses it, quite frankly. You know, we have this service available to policyholders, and you know, as part of the rewrite, you know, we did reach out to other law firms, and we sort of explored what else was available out there, you know, and as a sort of a service available for our policyholders. And you know, ARAG, what was DAS at the time, sort of came back to us with a fairly compelling solution, which was effectively what this is. But you know, just to put some context around that, bearing in mind that we've got 25,000 policyholders, you know, the phone line was only used 65 times on an annual basis. You know, I've got this image of like a big red phone in the middle of an office that's sort of like sat there waiting to ring your big jury phone, but nobody seems to use it. Nobody, you know, so which is, I suppose, something we just wanted to mention that effectively, and something I wanted to raise is that, you know, this is available to policyholders. I don't know whether policyholders even know it exists. You know, it's in the first couple of pages of the policy wording, as and when documents are issued, and it's available to them there. And I suppose the only other important thing to note on this is that, you know, by speaking to ARAG about a legal matter or a potential claim, it doesn't constitute notification under our policy. So that's something to just bear in mind, that, you know, if clients are using this service, you know, the Zurich and ARAG act completely independently, and speaking to them about a legal matter wouldn't constitute notification under our policy. So something to just bear in mind there. Next slide, please, Megan. So, are all MLP products the same? The answer is no. I mean, you know, this session that we wanted to put on today was more of an introduction into ERS and this product that is now available to you as part of Club Blue. But we wanted to include something a little bit more tangible as a takeaway for you as well. You know, for use of, you know, a bit of a slide or a couple of slides to keep on your desk for when you are comparing MLP policies, because particularly if you're going down the E-Trade route, you know, you could have 7-8 different quotes on your desk, and you know, we wouldn't expect you to be an expert in every single one of those wordings, given that it's one of many products that you're talking to clients about. So the intention of these next two slides is there's a bit of a reference point really of where to look when you are comparing these products, because whilst there may not seem much of a difference on the face of it, you know, they're all operating around the same premium, they all have similar excesses. There is a real gulf in the quality of these products when you are obtaining quotes online. So just to run through a couple of these then, some of which we've already mentioned, but you know, is it been quoted on aggregate or any one claim basis? We are frequently seeing more aggregate limits being issued, particularly for maybe more challenging trades like construction and for hospitality and bits like that. So is it any one claim? You know, our quotes are always any one claim across all sections, as I mentioned earlier. The automatic acquisition threshold, some still have 10, 15, 20%. You know, if you've got an acquisitive company, it's worth sort of identifying what that acquisition threshold is, just to remove the sort of the pressure and on you to have to speak to underwriters midterm frequently about new acquisitions. Is there an additional limit for insured persons for side A cover for non-indemnifiable loss if the limit is eroded? Lots of policies still don't have an additional limit for side A for insured persons if the overall limit is eroded by indemnifiable side B loss. Sublimits is a bit of an easy one, because if you're looking directly on the quote sheets, you know, there'll be lots of the extensions to each of these sections that have sublimits on. So insolvency hearing costs and emergency costs. Emergency costs is effectively ability for the insured to obtain early policy costs if our prior written consent can't be obtained because it's over a weekend, or you know, because it's in the early hours of the morning, it's been a dawn raid by a regulator. So those sublimits is an area to focus on as well. Kelly's already touched on this a little bit. Quality of legal representation. So under our policy, and this is something we keep getting asked a lot more about more recently, is can an insured use their own legal firm, you know, to protect and defend themselves in the event of a claim? And under our policy, it is sort of the obligation of the insured to defend themselves under D&O, corporate legal, and EPL. So, you know, we don't stipulate that an insured has to use our panel for defence of D&O, corporate legal, EPL claims, you know, but some of our competitors, well, most of our competitors have the same stance. You know, one of our big competitors, beginning with A, require the insured to consult, notify, and use their law firm for legal representation. Now, if you do that, you know, they have access, and that you're forced to use tier 3 and tier 5 legal representation. So, you know, these claims can be particularly difficult, particularly around D&O. So, you know, if you've got the option to use a tier one law firm or a tier 5 law firm, you know, I know who I'd want to stand next to me in the event of a claim if I was a director of a business. So the legal representation and defence and settlement is a huge part of these policies. So it's an area to certainly focus on when you are comparing them. I mentioned before about the runoff cover, the extended reporting period. Is it pre-quoted? Are you going to have to go to the underwriters to ask for it? Can you guarantee that the rates will be that the rates they charge, percentage rates, will be will be sort of cost prohibitive? Is it going to be expensive because there's been a claim, you know, or, you know, is it pre-quoted and you already know exactly what a 6-year runoff quote is going to look like from your insurer? Corporate legal liability, the entity section, a data breach, cyber claims excluded. I've already sort of touched on that. You know, a big area of focus as well, particularly for in the minute, at the minute, with all the continued news about data events and cyber breaches in the UK. Contractual liability. Now, this is a big source of claim for us under our entity section. Does it include breach of oral contracts as well, or is it just written contracts? You know, all oral contracts are recognised at law. You know, are they included within the MLP policy, or is it just written contracts? You know, we see a lot of claims for allegations of breach of contracts, breach of oral contracts as well. So lots of our competitors do include oral contracts, but some don't. So an area to focus on as well. Sublimit levels, I've already touched on this, but some of the intellectual property, company reputational recovery, pollution defence costs, you know, what sort of level of cover do you have on these individual sublimits as well? That's an easy way to sort of separate them out, really. Next slide, please, Megan. EPL, I mentioned before, you know, this is a big source of claim and the main source of claim under our policy and most other policies that I've been involved in the past. You know, what are the excess levels? Our excess level starts at £2,500 online, which is probably a bit low, if I'm being honest with you. You know, it's a little bit, particularly the amount of notifications that we see. Our EPL notifications are up 25% year on year. So the EPL access is significantly low, and we're frequently told that it's amongst the lowest in across Acturis. You know, on the basis that our average EPL claim for the last 12 months is about between 6 and 10 grand. You know, if you've got a £10,000, £15,000 EPL accesses, which are particularly frequent at the minute in the market, you know, you're being left without a lot of cover. They're significant EPL accesses, particularly when you're looking at SME customers as well. Does the definition of employee include past, present, or prospective? You know, we have claims that are brought as a result of people that are applying for jobs. You know, we've had a number of claims where you'll sort of get serial claimants who will apply for jobs in across a number of different names. So one, you know, the first one will be a white British person, and the second one will have somebody with an Asian name, identical CVs. You know, the white British person will get a job interview, the person with the Asian name will not. You know, so that's a valid grounds for discrimination against that employee, and that's brought by a prospective employee, not an actual employee. So listen, that's something to look out for as well, because we do see claims on that side as well. There was a period where we started to see, and we still do see it, redundancy exclusions under the EPL section. Now, for me, you know, what is the point in having EPL cover if you've got a redundancy exclusion on there? Because, you know, 9 times out of 10, an EPL claim is going to be brought following on from a redundancy event. So if you've got insureds that are planning on making redundancies or have made redundancies, you know, if there's a redundancy exclusion on there and a claim gets brought as a result of it, there's no cover. So something else to bear in mind. Benefit upon liability, mentioned this quite a few times, but are all plans covered? Is it just pension schemes? You know, with the healthcare schemes, training schemes? Zurich have a training scheme for CII exams. I'm guessing a lot of you guys will have training schemes as well that your employer puts on. You know, does it include those schemes as well? Is it just pensions? Is it full cover for regulatory claims, or is it just a small sublimit? I've mentioned before that, you know, the pension regulator, as well as the HSE and the FCA, are probably the most aggressive regulators that we see operating in the UK. So a lot of these claims that we pay, you know, 90% of what we pay under these policies, particularly for benefit plan liability and D&O, is defence cost related as a result of regulatory investigations? So is full limit for regulatory claims included or not? And finally, on the crime, is it just first party cover? Is it just employee theft, the old traditional fidelity guaranteed style cover, or is there third party cover on that? Does it include social engineering fraud? Does it include fraud committed by third parties, or is it just first party? Now, what I would just say to slightly caveat that a little bit is that we have seen a trend towards first party employee theft again. Social engineering fraud is still the buzzword within management liability, within commercial crime, and we still do see social engineering fraud claims. But given the deterioration in the macroeconomic climate, the cost of living crisis, the sort of desperation for individuals to appear more creditworthy than they are for borrowing, we've seen a sway back towards more traditional type employee theft and fidelity guarantee type claims. So just something to bear in mind. And I suppose, again, it's the same with insolvency. It's difficult to sort of justify and explain that to a client that their employees are going to be on the nick. But, that our experience tells us that, first party employee theft is on the rise again, or is particularly on the rise in the last sort of 12, 18 months. So I think that is it. I think that's it. It's a bit of a whistle-stop tour to ERS, and this again is more of a, like I said, this is the intention of this was more to be an introduction to ERS. ERS for me should have been part of Club Blue for the last few years, and we are very happy now that we've got MLP as part of it, because it's this, you're the same brokers talking to the same clients, and you've already got a connection with Zurich. So for us, we are incredibly excited about developing and growing MLP on Club Blue. Kelly is your first port of contact for new inquiries. We have a team of underwriters. We have a hub team in Birmingham that we've got about 8 or 9 senior underwriters there, with huge levels of experience. We've got regional underwriters as well, based in Scotland, Birmingham, Croydon, and myself based in Manchester, covering Manchester and Leeds. So we have regional presence as well for manually traded business, and we have a centre of excellence in Cardiff, some of which you may have had conversations with before on other lines of business. But just to finish up before we go into Q&A, although I can't quite see whether there are any questions or not. This is a very exciting opportunity for us, and we hope this is the first of many conversations around MLP, and we suppose just want to thank you for your time, as Kelly said. So if there are any questions, please let us know. Happy to take them offline. Our contact details are there, and Niall and Megan will circulate the slides. But if there's anything you want to talk about now or take offline, please do. But thanks again for your time.
Thanks, Tom. Thanks, Kelly. We can just give it a couple of minutes. We've got a few minutes till the end of the call anyway. So if anyone's got anything, please let us know. No worries if not, and can always pick up. So we've got a question here from
Yes.
Sam. So the question is, does your appetite extend to include care risks? So care homes, domicile care providers, and supported living?
Yeah, thanks, Sam. It absolutely does. Care is a sector that we are continuously focused on, because they are risks that have limited funding. They're usually operating on fairly thin profit margins. They've got lots of issues around employees. Crime is a challenge for care homes and domiciliary care providers, because you have lots of employees who have privileged access to stock, and our crime section of the policy extends to include client loss as well. So that money, that stock, those items that are in the care, custody, and control of our insured, as a domiciliary care provider, our policy will extend to cover that as well. So they are challenging risks. Don't get me wrong, but we have loads of them. We quote them. Quite frankly, we'll only really quote them for supportive brokers. But we have appetite to do it. We might probe into the risk management a little bit more, about the EPL procedures particularly. We might dive into a little bit more on the financials, where the money's coming from, what the debt structure looks like. Are they going to operate? Can they operate comfortably for the next 12, 18 months? But yeah, absolutely, we can quote them. Now, what I would say is they will probably refer online. So if you do have a care home, it might be quicker and easier to speak to us directly.
Brilliant. Thank you, Tom. Any more for any more? If not, we can probably wrap it up there.
That is perfect timing, isn't it?
Yeah, indeed. It's nice when it works out that way. Well, look, as Tom and Kelly have said, thank you very much all for joining today. We hope you found that useful and insightful, and can kind of give you the details you need to hopefully start doing some business in this area as part of your Club Blue deal. We're delighted to have this on board. So thank you once again for taking the time out, and thank you both, Tom and Kelly, for taking the time to walk through through that with us today as well. So hope you all have a great rest of your day, and we'll send up a follow-up email with the details and things like that, as Tom said afterwards. So I hope you enjoy the rest of your days and weeks, and we'll catch up soon.
Thanks now. Thanks
Thank you
all.
very much.
Thanks, everyone.
Take care.
Cheers.